Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Really quite interesting still in the global equity markets, as you've got still a little bit of nervousness out there, sort of mixed earnings coming out of the US, but still the rhetoric coming out of the Fed and certainly the data coming out of the US as well is still reasonably encouraging. You've still got falling unemployment. And so you've got a reasonably sort of robust and strong economy. The interesting thing is that obviously you're still not seeing a huge inflation push coming through in the US at the moment. Added to that, obviously you've still got a pretty sort of volatile market over in China. Europe appears to be sort of emerging from the doldrums, and still the sort of talk is that the Fed will be looking to increase rates because really they've backed themselves into a corner. They've sort of been preparing the markets all year for a rate increase, and really if they don't follow through with it now, it really does dent their credibility in a big way. But as discussed before, that once the Fed do look to increase rates and actually sanction the first rate increase, it won't be a huge rapid increase. It will just be a slow, steady increase, just ratcheting up maybe a quarter point every sort of couple of months or so, and just really waiting to see how the economy reacts to that initial increase. On the face of it, though, it should be good for the economy. The reason why rates are increasing is because the economy can stand on its own 2 feet, and certainly rates are artificially too low at current levels. Here in New Zealand, there was another very weak dairy auction overnight. That just adds a little bit of further pressure out there, and potentially just almost confirms a sort of a further cut in interest rates in September. And then it will be interesting to see how that sort of pans through to the rest of the economy, because certainly with the New Zealand dollar falling really dramatically over the last sort of 2 to 3 months, that's going to then start to push the inflation figures up a little bit, and it'll just be interesting to see with sort of rising inflation, also a sort of pretty rampant housing market, especially in Auckland, see how the Reserve Bank can sort of weigh up that against potentially it's a little bit of a sluggish economy. Just interesting on the dairy auctions, though, it's not all sort of doom and gloom. There is a little bit of light at the end of the tunnel, with the prices expected to sort of increase a little bit towards the end of the year. Now again, obviously, this sort of weakness in rates has major implications out there for most New Zealanders are looking for a sort of income derived return from their portfolio. And sort of term deposits are sort of falling now down to around sort of 3%. So investors are starting to look at alternatives out there. Obviously, you've got dividend shares, property trusts, etc., that are returning a pretty reasonable return. And certainly, if you're interested in those, call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.